Hello, in this presentation we will continue writing some checks for our bookkeeping problem in our Excel worksheet, and keep in mind how those same checks might be entered into an accounting software system such as QuickBooks. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. We're going to take a quick look at QuickBooks first and see how these checks might be entered into QuickBooks, and then jump over to Excel and put that information into Excel. First check we're going to write is to Edison for the utility bill. Once again, we're just going to write a check. If we were to do this in QuickBooks, we can just go to the write check icon, which can be found in multiple locations, including on the home page of writing checks. And we'll see an icon that looks just like a check, pretty much. And we're going to write this information in. We, of course, have the check number, the date. We're going to write who it is to, in this case, Edison. If it's our first month of operation, QuickBooks is going to make us create all the vendors. And again, we're writing a check in this case, so QuickBooks doesn't need to do anything special in terms of creating the subsidiary ledger at this time, but later it may need to create a subsidiary ledger if we make payments on account, meaning enter a bill, and then need to track that bill in terms of accounts payable. So QuickBooks basically forces us, most of the time, to create a vendor when we enter this information so that it can produce that information automatically. So we're going to have that vendor. We'll see that when we go to the accounts payable section, what that vendor creation of the subsidiary ledger looks like, and why QuickBooks in essence forces us to apply a vendor, a customer, employee, or other type of tab here. So then we have our check, and it looks just like this, or it looks like a check. We have the Edison that we're going to write the check to. We have the check amount, and we have the expenses, something that typically might not be on all checks, might not be something we always put into our check register. The other account, the line item in essence of the expense account, or usually the expense account, let's say the expense account, could be an asset account, that we're going to. In this case, of course, utilities. So note there's two things happening here from this check. One, checking account means cash going down. Two, expense account means utility expense going up. That then decreasing net income by the amount of $620. Let's see that process in Excel. We will now record this transaction in Excel. We're going to say first question is cash affected? Is the checking account affected? Yes, it is. We're writing a check. And the checking account has a debit balance in it. We're going to do the opposite thing to it in order for it to go down, which is a credit for this case. So we'll copy the checking account. Scroll on down. We're going to write in cell P20, we're going to write the date of 1/28. We're going to put this on the bottom, so we're going to put it underneath the date, right-clicking and pasting 1, 2, 3. Going to go ahead and format it as we go. Go into the Home tab, Alignment Group, Increase Indentation. Then we're going to go to the credit side, S21 negative 620. Enter. We're going to have a debit in R20. I'm going to say negative of this number, taking that number, flipping the sign to get 620 debit. Then we just need to know what account that should be. Note then, once again, that thinking about the cash first will help us a lot, because that'll help us to know which way cash is going and which way the other account is going, and then just kind of choose what that other account is. Then we want to, of course, think through that and see if it makes sense that we are debiting this other account. That other account is, since we're paying the Edison utility bill, utilities. So utilities is going to be down here in the expenses. Remember, it's in order: assets, then liabilities, then equity, and then the expenses. So we're looking down here somewhere. We want to pick up utilities. We should be consistent with these expenses, by the way. When we put this stuff into something like QuickBooks, it's possible to just keep on making new accounts or something like that, which is not good, because then we'll have a lot of accounts with little things in them. So we do want to be consistent. We could call these different names. Notice we dropped the expense in a lot of these names. That's okay. We don't have to call it utilities expense. We could call it just utilities. We might include multiple things in utilities or break out utilities. We might have something for the electric expense and then the gas expense or something like that, or group them together. Whatever we do, however, should be consistent. So we're going to say that that is an expense. Like all expenses, it has a debit balance. We're going to do the same thing to it, which in this case is another debit. So we're going to copy that in AJ36, copying the utilities expense. Whoop, I pasted the checking account. That's not what you need to do. So I'm going to do that again. I undid that copying. We're copying utilities expense, scrolling back up and putting that in Q20, right click and paste 1, 2, 3. So there's the journal entry we have journalized in the general journal, and now we'll go through the process of posting that to the general ledger. Here's the utilities expense. Remember, it is in order in the trial balance from assets, liabilities, equity, income, and then expenses. Way down here is the utilities expense, second to last account. Therefore, it's going to be way over to the right on the general ledger. So we'll go find that way over to the right. In order to do that, we'll freeze the panes. That'll help a lot. So we're going to scroll up top. We're in cell AJ1. We're going to go to the view up top. And we're going to go to the windows and freeze panes. Freeze panes. Then we're going to scroll all the way to the right. So we're scrolling all the way to the right to the general ledger. Those are the assets. These are the liabilities. There's equity. There's income. Here are all the expenses. We're looking for the second to last expense, which is that utilities expense. We're in cell BS31. And we're going to select equals and that R20 and enter. And that'll bring the balance up from 0 to by 622. 620. So let's go back to the trial balance and see what that does on the trial balance. Scrolling back, we should see that pull over to the trial balance. And here we have that. There is the 620. We're out of balance. Note that income went down and it's actually negative now, meaning the assets, the revenue adds up to a credit balance of $2,675 and the expenses add up to $3,740. So revenue minus expenses mean we have a loss, meaning the debits are winning. So I know that can be a little confusing because the positive number is a loss and the negative number is income. But remember, we're talking about debits and credits here. We're saying that the credits are losing over the debits, meaning the credits of revenue are less than the debits of expenses. And now we have a loss of $395. Recording the other side, we're going to go to the checking account. And the checking account is right there. It's our first account on the trial balance, therefore first account on the general ledger. Scrolling down to the new amount, we're in AN21. AN21 equals, pointing to this 620. We see this 114,586 is going to go down by the 622. 113,966. Scrolling down, we are back in balance here. Scrolling up, we have the checking account is back to the same amount that we just saw there. Now we're going to see one other check, and then we'll go to the financials and see what this looks like in the financials. Back to how this may look in accounting software such as Quickbooks. We're going to write another check to Verizon. This is going to be for the telephone expense. So once again, we could just click on the check. We're going to write a check within Quickbooks, and this is a Quickbooks homepage. Write check item icon will go to this write check screen. And we're just going to say that it's going to go to the checking account. The check number is going to pop up automatically. Then we're going to have the date. And we're going to write it to Verizon. That's who our phone company is. And then we'll have the amount. Isn't there yet, but we're going to have the amount. And then we're going to have the second account. Now note, if we would have to set up the name again as the vendor if we needed to, and if the account wasn't there, we would also have to set up the account. So remember that this is something that may not be done all the time when we just write our checks. If we're writing the checks by hand, we typically know that it's going to be going out of the checking account's going down, and then we know it's for the phone bill, but we might not explicitly write that this is going to go into the line item expense account of telephone expense as opposed to maybe total utilities expense or something like that. So that's going to be the other side. QuickBooks then will take this, reduce the checking account, and increase the telephone expense account, which will decrease net income. Let's see that in our Excel worksheet. Here is the Excel worksheet. We're going to put in the 1/28 new date. We're going to say, is cash affected? Yes, it is. Cash is going to be decreasing. There's the cash account. How do we make it go down? We do the opposite thing to it, which in this case will be a credit. So we're going to copy the checking account in AJ5, right click and copy. Scrolling down, there's the date. We're going to be on the bottom of the date in Q24. Q24, right click and paste 1, 2, 3. We're going to do some formatting, go into the Home tab up top, go into the Alignment group, and increase that indentation. Then we're going to go to the credit side in S24 and write the amount that of credit 360, enter. Then we could just put that debit on top, already knowing what that is. I'm going to use the plug formula to do so, negative of that number. There it is. Once again, we can get all this information just knowing that the checking account is going down. Then we just need to pick what other account is here. That account then we know is going to be an expense. We're paying, remember, Verizon telephone expense. It's in order: assets, liabilities, equity, income, and expense. If we have our chart of account, if we have a trial balance, very helpful to pick out which account we want to be working with. It's going to be somewhere in here. And if we look at that, telephone expense right there. So telephone expense, we already know we're going to debit it because we credited cash. But if we think through it, just to double check it, we see that all expenses have debit balances. They only go up, meaning we only pay the telephone bill. They don't pay us. And therefore, it's going to go up in the debit direction with another debit. That then, of course, will bring down net income, or give us more of a net loss in this case. So we're going to copy the telephone expense. We're going to scroll up, and we'll be in Q23, right click and paste, 1, 2, 3. There's our journal entry that we have journalized in the general journal, which we will now go through the process of posting to the general ledger. Here's the telephone expense account there. It's way down here. It's the third to last account on the trial balance, therefore will be the third to last account on the general ledger. So we're going to scroll all the way to the right till we find it, but first, let's freeze the panes. That'll make things easier. So we're going to go up top to AJ1. We're going to go to the View tab. We're going to go to the Windows group and freeze panes. And it's already been frozen, so if we're going to freeze panes. So we have frozen the panes now. So now we're going to scroll back down. Going to go all the way to the right of our general ledger. These are the assets. Those are the liabilities. Then we see some equity accounts in light blue. And then here are our income and expense accounts. We're going to be going all the way over to BS24. And within BS24, we'll select equals and point to this 360. That bringing this balance up to, of course, 360. Scrolling all the way back to the trial balance to see what happens to the trial balance. That 360 hopefully pulling over to the trial balance in the telephone expense area. There it is. We're out of balance by 360, meaning the debits minus the credits are out of balance. And if we look at net income went to bigger of a loss. So we have more of a loss, meaning the telephone expense went up. And that means that revenue minus expenses. Expenses are going up, are more than revenue. So we have a loss that was increased. The loss went up to $755. Now we'll record the other side. That to the checking account. That, of course, is our first account on the trial balance, therefore the first account on the general ledger. We're going to scroll down to the checking account in AN22 equals, and then point to that 360. That should bring this 113,966 down by 360 to 113,606. That same amount found on the trial balance. Now we're going to unfreeze the panes, see what happened to the financial statements. So we're going to go to the View tab, Windows, Freeze Panes, Unfreeze. Then I'm going to select the checking account, and I'm just going to point to it. So we don't have to do this. I'm just pointing to that's something that we changed. And then we changed a couple items down here. We changed the telephone expense, and then we worked with the utilities expense. So let's see what that happens, what that did to our financial statements. So we're going to scroll to the right. The financial statements will be automatically updated as we do this, and that's going to be similar to how it works in accounting software, but we need to see what that automation does. So here's going to be the checking account has been adjusted down, and we see that the total assets still equal liabilities plus equity. Net income has been, the expenses have increased by the telephone and utilities expense to here. That resulted in a loss, meaning revenue is here minus the cost of goods sold. Gross profit then 725 minus the expenses brings us a loss of 755. Not unusual for the first year of operation, so we have that. And then we have that same loss. It's going to be down in the statement of owner's equity. And that gives us an ending owner's equity of $149,642. That then matching what is on the balance sheet here. So note that this could all be done automatically. We will go through the process of creating the financial statements, but in practice, or in accounting software, people often just put in the data and then jump to the financials and try to see what happened when I wrote that check. And to see the detail, we could just double click on this item. In a lot of accounting software like Quickbooks, we can zoom in on it and look at the GL and then see the detail that way. So oftentimes when we are working with software, we're jumping to the end product and then going backwards to the detail to find out what happened. What we're doing here is seeing how that detail is used to create the end product, which will make it, if we can understand both processes going both ways, then we'll be able to have a better understanding of how to use this information.